welcome. I am so excited. I'm celebrating because today represents 1 year of this podcast. The Sunlight Podcast is turning one. So I just want to thank all of you who are listening right now, whether you've been with me since episode 1 or you just discovered this podcast. Thank you so much. Thank you for listening. It just fills me with joy to know that this is reaching you and providing a service for you that hopefully is valuable to you that maybe you can't find anywhere else. So, with that said, I want to give you a really juicy episode today, short and sweet, about the 3 secrets to extra money from your tax deductions. So I want to talk about 2 areas of the tax code where you can actually get more money as a deduction than you actually spent. That is almost never true in the tax code. And so it is of particular interest to me that there are these very couple of places where it can be true. It's not guaranteed to be true, but it can be, especially for people that I tend to work with, people who are younger, often operating on smaller budgets, often kind of budget conscious or environmentally conscious. Okay, so this is where we in particular can benefit, especially from the tax code. All right. And I'm going to throw in a little bonus, a bonus secret about another thing to track and a special way to track it, just so that you get just a little bit more money on your deductions on your Schedule C, which is where you list the expenses of your freelance, side hustle, or small business. All right. Awesome. So let's just jump right in. So I want to talk about averaged rates. I know it's like heart-stoppingly boring sounding, except when you think of it as bonus money or getting more money deducted on your taxes than you actually spent. Okay, so where this comes from are 2 areas in particular where the US government allows you to take, instead of giving your actual receipts for money you spent for a couple things in business, they actually allow you to take an average. So the government sets a rate for an average US taxpayer, average business person in the US, and allows you to take that rate instead of what you actually did. I'm going to get into more detail on this in a second. But in those instances, you can take the average rate whether you spent that much or not. Okay, that's the thing that's really cool. And there's actually some ways that this has been getting juicier and juicier for people who are environmentally conscious or vegetarian or non-drinkers. If you're not spending a lot of money, this can really, really benefit you. This is why this is like one of my very, very favorite parts of deductions and why I saved it for my 1-year anniversary. Okay, so the 2 areas that I'm talking about are mileage, taking a mileage expense for driving that is related to your freelance business, and travel, having meals when you're on a business trip. Okay, so let's do mileage first. All right, so what you need to know, and by the way, I have a whole episode on mileage just to stand alone so you can learn all the rules for that, but quick summary of how mileage works when you are operating a self-employed business, okay, and filing on a Schedule C. You are allowed to take a deduction for miles that you travel in your personal car. Now, the government is well aware that most people who work for themselves are not buying an entirely separate car for their business, right? That's not normal, and it's okay. You don't have to do that. But you're still not allowed to deduct stuff for, the personal use of that vehicle. So dropping your kids off at school, going grocery shopping, meeting up with friends. Those things are all personal and they're not deductible. So what's important under any circumstances when you're going to take a mileage deduction is that, 1, you're doing actual business travel, right? Now, this can be daily travel, that's fine, or it can be larger trips. Either one is fine. It's important to understand that your commute to your place of work is not deductible. That is actually considered a personal trip, okay? So scratch that one off your list, even though you might have thought it was deductible. It's not. But anything outside of that is deductible as mileage. The key is you have to track your mileage in order to be able to take a deduction. Now, I know that might seem sort of annoying. You're kind of like starting to write this off, but stick with me because the mileage rate is very generous. So you have to track your mileage, and some examples of business trips that are deductible and that you should be tracking the mileage for are meeting with a client, doing a site visit, meeting with a potential client, going to give a talk somewhere. I'm going to an offsite meeting, site visit, you name it, right? If you're an artist working in your studio, your commute to your studio, that's a commute, that's a personal expense. But if you then are going to go visit your gallerist, do a studio visit with another artist, do a supply run, all of those things are deductible, okay? Basically everything except your commute to your place of work, whoever you are, all right? Now, the IRS gives you two options for how you can take this business portion of your mileage as a deduction on your tax return. So you're going to have to know how many miles you drove for business, not including the commute, no matter what. And you also are going to have to know, no matter what your total miles were for the year. The reason for that is because under all circumstances, you're going to be developing a ratio. You're going to need to say, this is the total miles I used on this car for the year. And here is this smaller number that is my business miles, okay? The reason that's so important to the IRS is the IRS wants proof sitting there on your signed tax return that you are not taking 100% of the mileage from your personal car, okay? That's kind of the whole point of that, all right? So in order to catch your mileage, total mileage every year, which most people who don't work for themselves don't know to do, I recommend, my tip for this is to set a calendar alarm for yourself for January 1st every single year, and just snap a quick picture of your odometer or write down in your notes app on your phone, wherever, what your odometer reading is for the year. Of course, if you sell your car, you're going to have to get the ending odometer mid-year and then the new one for the new car. Okay, so don't forget that little detail. But that's how you can get your total mileage. And it's great because if you keep recording your odometer every January 1st, you're getting ending mileage for the year before, as well as a beginning mileage for this year. Okay, so it's two birds, one stone. All right, so you're tracking your mileage. The IRS allows you to either take what is called the actual expense method or the mileage method. Now, I was talking to you about how standardized rates and how those are really generous. That's what the mileage method is. So just real quick, the actual expense method, I don't recommend it. Basically, nobody ever gets more money that way. I've only had one client in my entire tax preparation career who ever came out better using the actual expense method. And she was a farmer who put about 20 miles on her truck per year because she basically just used it to drive piles of manure from one side of the field to the other. and so she happened to do better with actual expenses. To take that, you have to actually keep all your receipts, tires, repairs, gas, insurance, all of those expenses, add them all up, and then apply that ratio for total mileage plus business mileage and whatever ratio that gives you. You know, if you put 100 miles on your truck for the year and you drove 20 of them for business, that would be a 2 out of 10 or 1/5, 20%. You get to take 20% of all the expenses in your actual receipts, which you've kept, okay? That's the actual expense method. I'm basically saying, people don't generally come out better that way. And it's way more annoying because you have to keep all the receipts, right? But the mileage method is beautiful because you are not required to keep receipts for your car, which is nice because there are a lot of them. They're in different places. Like I have a lot of automated payments for my car, like insurance, whereas gas, of course, that's like, random roadside. Sometimes the receipt thing is broken or I forget to get it. So when you're taking the mileage method, alternatively, the government sets an annual rate, an annual mileage rate, and you are allowed to use that rate. It's the same rate for every taxpayer across the entire United States. you're allowed to use that rate and apply it to whatever your actual business miles driven are. So let's say you had 100 miles on your car. That's very low, but for pretend, you had 100 miles on your car, 20 miles were business miles. You would multiply 20 times the US government mileage rate for the current year, or sorry, for the year that ended when you're doing your taxes. And that would be your mileage deduction. Here's the thing. The mileage rate given to you by the US government is incredibly generous. And this is a place where those of us who are very environmentally conscious, who might have a compact vehicle, who might drive a hybrid, who might even have an all-electric car that doesn't even use gas, we still get that mileage rate, the bulk of which is based on oil prices. So you can get a massive payback, a massive deduction when you never even used gas. This is pretty cool. Or when you use very little. If you think about it, what the average gas efficiency is of a car in this country, it's mostly small trucks, right? It's mostly really big gas guzzling cars. Unfortunately, that's the country we live in. But for those of you with gas efficient vehicles or, hybrids or electric cars, you're not even using gas, or you're not using very much gas, but you still get to take a deduction as though you were. So that's one of the secret, juicy, amazing places in the tax code that you get extra money. This is one reason that I recommend for everyone. Download a mileage app, track your business miles, and get that deduction, because it's a ton of money. And the more efficient your car is, the more extra money you're getting as a deduction. So great, right? So I don't know about you. I have an electric, like a hybrid electric vehicle. It gets 50 miles on electric before it starts using any gas. Mostly that means I almost never use gas. I basically only fill up my tank when I'm on a long trip that goes beyond 50 miles, right? So for me, most of my mileage isn't using any gas at all. So I'm getting a huge, wonderful benefit from this. If you just think about it, if I were to drive my car, here's a more realistic number, like maybe say I use my car 10,000 miles per year total, and that half of that, 5,000 miles, I use for business trips. Let's just do the 2023 mileage rate is 65.5 cents per mile. So let's just say 5,000 of my miles times 65.5 is $3,275 of a deduction for that 5,000 miles. Now, that's pretty modest mileage, business mileage, and a pretty great deduction. And how much of that did I actually spend on gas? You know what? I might have spent zero. I probably spent maybe $200, but I get a deduction of $3,275. So take note. That's a really, really awesome benefit that you can take advantage of. I'm going to put a link in the show notes to Mile IQ, which is my personal favorite mileage app. It's the one I use myself. I am using an affiliate code, yes, so just be aware of that. But it's the one I use myself. I really like it. I think it's good. You can use whatever mileage app you want. No worries. Okay, the next place in the US tax code where you can get bonus money that you didn't even actually spend necessarily, is in what is called the per diem meals rate. Okay. So again, when you work for yourself, when you have a small business, side hustle, freelance work, anything that you file on a Schedule C, you are allowed when you travel for business. Now, typically business travel is something where it's long enough where you need to rest. Typically that means overnight. So when you do travel for business, so you might go to a conference, you might drive to give a talk in another state, whatever it is, whatever that reason is that you're doing the business travel, you can, again, either take an actual expense or an averaged rate for the meals that you have while you're traveling. Okay, so here's how it works when you're traveling. When you travel, again, there's the actual expense method where you would have your meals while you're traveling and you'd keep all those receipts. And then you should be aware that the IRS never lets you deduct 100% of your meals. They only allow 50% of all meals expenses, whether that's a client meal or whether it's a meal while you're on business travel. Okay. It's kind of funny that they do that, but basically the logic goes, you have to eat whether you're doing business or not. So we're going to arbitrarily say that some portion of your eating is just not deductible. It's necessary and personal. So we'll give you half of it as a business expense, but not the other half. All right. So either way, you do have to eat. You are going to spend the money. And so you are allowed to, track the expense and take half of it as a business deduction. So you can either capture all the receipts for all your coffees, breakfasts, lunches, dinners, etc., while you're on your business travel, and then tally them all up at the end of the trip, and you get to take 50% of that expense as a business travel meals cost deduction on your Schedule C. Or, and this is only good if you have a Schedule C, this does not work if you have an S corporation, which, sad to tell you, I'm an S corporation, so I no longer can do this, but you probably can. The alternative is you can take a standard rate. The standardized rate, again, this is a rate set by the government. In this case, the U.S. General Services Administration sets the domestic rates. And just in case you're curious, the State Department sets the international rates. There's international and U.S.-based per diem rates that vary by country, by city, by location. And you can take a per diem meals rate instead, a per diem meals expense, instead of tracking all of your receipts and adding them all up. The per diem meals expense, basically how it works is you just track in your notes, in your tax notes, you track where you traveled, specifically what city or what region, and how many days. Okay, that's all the information that you need. And this is information you want to keep safe for your taxes, for your tax return. Of course, if you have your travel marked out on your calendar, it's pretty easy to go back through the year when you're doing your taxes and count them up. I often do it that way myself. So you need to track where you were and how many days. And basically you get to take, there's a link on the USGSA website too, and you type in the year in question, and then you're going to look up what the per diem meals rate is for the area that you were visiting. And you get to take that per diem meals expense. And again, you get half of it. Okay, so you don't get 100% of that as a deduction because 50% of all travel meals are non-deductible, but you're going to take that deduction. Here's the thing. Now, for those of you who like to get very spendy on business travel, maybe the actual expense is higher, maybe the per diem meals rate is higher. You're allowed to choose which one you want to do. So go for it. Just look at the rates, see which one is better and take that. But if you are traveling on a shoestring, if you are at the beginning of your journey in business and you try to travel on the cheap, if you don't drink much, if you're vegetarian, if you're a smaller person and you just don't eat as many calories, this has been my lifelong thing. And I just often am spending a lot less money on food than people around me because I, don't eat a lot of meat. I don't drink a ton and I don't eat that much. So I can be a pretty frugal traveler when it comes to meals, although I'll admit to you, I really love like a beautiful restaurant and I will now enjoy myself on business trips. That said, I'm going to give you a sample rate for New York City, which is one of the higher per diem rates. So they actually helpfully break it down for you so you can see exactly how much they're averaging for a business traveler in New York City. So again, it's important to note that they're not saying they think you're going to spend this absolutely. They're saying you can feed yourself in New York City for these amounts. You might spend more. And if you do, you probably want to keep your receipts and do the actual expense method. But what they're saying is this is what the US government thinks is a pretty reasonable amount for a person being modest in New York City. So the total for a day is $79. One day, meals and incidental expenses, GSA rate is $79 for New York City. Okay. That's giving you $18 for breakfast, $20 for lunch, $36 for dinner, and $5 extra for whatever, bottle of water, a coffee. Okay. So it's pretty interesting, right? You can look in your own heart, you could look in your own budget and say, do I eat for more or less than $79 a day when I travel to New York City? I don't know. We're all going to vary. But if you're kind of on the lower eater end of the spectrum, this rate might be extra good. And it, again, might be a place where you're going to get more of a deduction than the money you actually spent out of pocket. And that to me is something super cool. All right. Okay. Last but not least, I have a little bonus for you, which is also to do with your mileage. And that is whether you take the mileage rate with the standardized mileage rate or the actual expense method where you keep all your receipts for your mileage. I want to mention that parking and tolls is actually considered an additional and separate expense that you get to take regardless of which method you use. So I want you to just note in your brain that parking and tolls should actually have its own place on your bookkeeping spreadsheet. And if you're in Money Bootcamp, if you're in my program and use the tax bookkeeping spreadsheet that I've developed, you'll see that it is broken out there. But you want to actually track parking and tolls separately because that is just fully deductible, whether you take the mileage method or the actual expense method. Okay. All right. So those are 3 kind of extra bonus money areas that you can get in your tax deductions. And I hope that you squeeze a little extra money out of your taxes this year using that. Also, if you don't already have my visual guide to your tax deductions, I'm kind of referring to a lot of the rules that I write down in this 1-page visual guide. That's very beautiful. So if you don't have that guide yet, you can get it. It's free. You just type in your email at my website. It's sunlighttax.com/deductions guide. And you can download my free 1-page reference guide to all those updated 2023 tax rules for your deductions. And they include the details about the mileage rate and the per diem meals rate and even parking and tolls. So you'll see all of that there. So make sure if you don't have it yet, you download that guide at sunlighttax.com/deductions guide and enjoy squeezing a little extra money out of your tax deductions this year. All right, I'll see you on the next one. Bye. Thank you for watching. If you like this video, be sure to like, leave a comment, and subscribe to my channel. I'm so grateful for that. This video is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.